In this video, we're going to go through a simple swing trading strategy for cryptocurrency, and I'm going to go step by step through a trade and all of the points that I would do through a swing trade. This is the strategy right here. It's very simple, and these are the steps that we're going to go through. So I'll list each of those as a timestamp in the description if you want to go ahead and rewatch it. Firstly, what we want to do is understand what swing trading is, and then we can get that in our heads in terms of what we want to do. So I'm going to trade Bitcoin here over on MEXC. I'll leave a link to MEXC in the description. They give a deposit bonus up to $4,000 in your futures trading account, which we're going to use for swing trading. So check those out via the link in the description. But what we want to do is firstly understand what swing trading is, and then we can go ahead and find some trends. So swing trading really is a short-term trading strategy. It's not day trading, but you're looking for a swing in the market. That's why we rely on technicals. So we're looking at plotting the technicals on the chart, getting that in our heads, and then understanding what the market might do over the short term. A swing trade could be anywhere from a couple of days to maybe a couple of weeks, depending on who you are as a trader and what you want to trade. I'll go through some different examples of that. So firstly, let's look at the trend. What trend are we trading right here? I would always suggest to trade with the trend, although it gets a little bit difficult because depending on your time horizon and how long you want to be in the trade, the trend could obviously change. And so I'll go through some of the points here. Firstly, what we want to do on something like MEXC is obviously find out what the longer term trend is. So what I'm going to do is go over to a day chart right here. So by the way, if you don't know how to use a system like this, I've got some beginner's guides in the description. I'll list them in the description that goes through what all of this is. But what we're going to do is go over to the day chart right here. And that's giving me a longer term time horizon for the chart. So each candlestick right here is now 1 day in length. That's really good for me to understand what the longer term trend is. So what I want to do is look for at least kind of 6 months plus of the chart, and then I can plot a trend on here. So what else I'm going to do is go over to the function right here, and I'm going to search for some indicators. I'm going to put some moving averages on here to give a very simple overview of where the trend is. So I'm going to click on this a couple of times to get a different moving averages. So they've come up here in the top left. Now what you'll see is the moving averages that you want to plot. You can change these to whatever you want. I'm going to personally use 3 different moving averages, which is a 50, a 100, and a 200. To do that, go to settings, change the color as you want, go to inputs, and then go to length. Now, moving average just plots the price of something over time. So if you have a length of 9, that means there are 9 periods where it's going to plot the average over that 9 periods, right? This is a day chart, so 9 days. 9 is very, very short term, and you can see the yellow line follows the price very closely here, so it's not really telling us anything. What I want to do is go for a 50 and press OK, and you can see the line is now smoothed out a lot more. Because I'm on the day chart, this is giving me 50 days. So this is a 50 period or 50-day moving average. If we move down to the 4-hour or the 1 hour, that's going to be a 50-hour moving average, for example. That gives me a short-term trend. Now what I want to do is go and plot a longer-term moving average. So I'm going to put 100 on here and then press style and obviously make this stand out. Blue's okay for me. And you can see that on the chart right here, press OK. Now you can do this, the third one, I'm going to plot a 200. So we go over to inputs, we put 200. Make sure the style is to your liking, whatever it may be. Let's do green here. And now what we have is 3 moving averages. We have the yellow, which is 50, which is short, blue, which is 100, which is kind of medium to long, and then the 200, which is long. Now, it looks complicated, but essentially what this is telling me is that we're in a downtrend, right? Why do we know that? Well, look, the moving averages are all pointing down. So that is a downtrend. Also, the price, as you can see, when it moves back up to these moving averages, gets rejected from them. So you can see that here we tried to move through, but we didn't really. Then we go down further. You can see we get rejected at the moving averages and move down. And then here we're moving back into the moving averages, but again, we get rejected and move down. And then once more here, we're actually coming to what would be known as kind of a consolidation where the price is saying, okay, we're actually at these moving averages now. Now, what that's telling me is that the direction, the momentum of this trend is actually starting to slow down a little bit. This has been a very long-term downtrend, as you can see, for what, 6, 8, 9 months, right? So we're still in a downtrend, which means we have to mentally say, in terms of the trend, downtrend, right? So we're in a downtrend. Now, if you trade futures, you can take advantage of that by going short, which means selling first and buying back later, going short. So taking advantage of moves down. Or if you think the trend is actually changing, then you can go long and, try and ride it up. But for me, knowing this trend is to the downside. And so the bias that we have definitely is going short, selling rips, right? And that's the bias that you have, unless there's data or something on the horizon that you think is positive that will change the trend. Next, as part of a swing trading strategy, I want to plot on the chart where the key support and resistance levels are. Support and resistance is essentially prices both below and above the current price, where it may go in the future. And you can plot this very easily by looking at previous levels where the chart has traded around. So you can see that on the chart here, I have these two red lines, and this is support and resistance. What I mean is to the upside, so we can draw a line on here, where did the price meet resistance before? And it very clearly met resistance at this level. You can see this top level, which is around 25,000. Why do I say that? Because we have the price going up to these levels 3 times, and then it met resistance and fell off. Okay, so that is a resistance level. Now the support level we can see is the previous time when the price moved down and then it actually met support and moved up again. So that is a support level right here. And that gives us 2 very clear price levels where the price may go to, dependent on if it's moving up or down. So you can then use that in your trade for various things. A take profit. So if you're going long, where is your take profit? Or short, where is your take profit? And also, where is your stop loss? When you're swing trading, I would recommend using both of those, right? A take profit level where you think that's where I want to take my profits, and a stop loss level in order to prevent really big losses if you get the trade wrong. The other way to look at support and resistance is to really look out on the chart and say, okay, where are key levels? Now you can see this area right here is where the price met resistance before it broke out. So that is a key price level. So that is what we mean by support and resistance. So we can plot this price level on the chart and even put it all the way over to our chart right here and say that is a key area. Now it just so happens that the price met resistance at this level before, and now like a year or so later, even more, we're at this price level exactly again, and we're meeting support. As you can see, support and resistance are just key price levels. If you're above, then obviously the price below is support, and resistance can turn into support, right? So it really is saying support and resistance, it's just key price levels. You can see 20,000 is a key price level. It's a round number. Humans trade to those, and it traded around this a lot before. So that is what I would say just a key price level. Now, calling it resistance or support just means that it's either above or below the current price. The next key part of a swing trading strategy is looking at some technical patterns before getting into the kind of market analysis. What I mean by that is, now we want to know, what is the chart trying to tell us in terms of the trade? Because the chart is going to tell us, who is winning, either buyers or sellers. And part of a swing trading strategy is simply to ride momentum and a swing in the price. And so what we really want to know is, where is the momentum and trade, which we'll get onto next. But the chart patterns are going to tell us kind of who's winning, right? Buyers or sellers. So we go back onto the chart here, and we can put some chart patterns on. Now, if you don't know about chart patterns, again, I've got some videos on those. I also cover all of the most well-used chart patterns in my crypto course. Again, that's linked in the description if you kind of want to get more professional about that. So what we want to do is put some, or at least try and identify some chart patterns. So we're just going to go and zoom into kind of the last 6 months. And if you don't know chart patterns, this is going to be more difficult. Have a cheat sheet right here. So if you want to pause the video, what we're looking at is the chart telling us that it's setting up for a kind of bullish move or a bearish move, right? Because that's what we want to know. So there are various chart patterns here that we can go through, but we want to plot some of those patterns on. So as you can see, what I've done with these blue lines, if you can just see them, is essentially we're trying to chart whether the price action is bullish or bearish. Now, over the last kind of 3 very tradable events, this one here, and then this move here, and then we're in this move here as well. each chart pattern has been bearish. The reason for that is they've essentially been just bearish chart patterns, either consolidations to the low side or bearish flags like this one. This is a bearish flag. This is a rising wedge. So if we go over to our chart patterns and a cheat sheet here, we can look at, bearish chart patterns, and we see absolutely a bearish flag, which is a consolidation like this in a downtrend. We also have bearish wedges right here, which are, looking to potentially move to the downside. If you go back to the chart, you can see these play out. So this was a bearish, kind of a bear flag right here. This one also looks to potentially be a rising wedge, which is also a bearish pattern, and it actually has broken out to the downside a little bit. So they're the chart patterns that you need to kind of identify and say, what is the chart telling me? Now, these are not 100% foolproof. You get false flags. Something that looks like a bear flag can actually, over a few trading days, turn into something bullish. But it's going to give us, an idea at least of which way we want to go, right? Because what we're deciding right now from the trend is a downtrend. We're looking at key price levels to get some trading levels, and the chart pattern, we're just actually trying to give ourselves an idea of like, what has the highest probability of actually happening, a move to the downside or a move to the upside. The last thing I would do before entering our actual trade is looking at the momentum. It's really important. And also, what is the time horizon and events that you're trading? A swing trade, remember, tries to take advantage of a swing in the market and the change of momentum, and you want to ride that momentum. So now we're looking at momentum and events and news. What is the thing that you're trading? You can't just say, I want to make money today and I'm going to enter my trade today. You want to get a good probability, enter at the right time for a swing in the market. So the one thing I would do here is use MACD for momentum. If you don't know what MACD is, I have some videos going over that. I also cover that in my crypto course as well, trading strategies and everything like that. So we want to put MACD on the chart. So go over to the indicators right here, type in MACD. Like I said, if you don't know what MACD is, the videos explain that, linked in the description below. So this is the MACD down at the bottom here. Now, MACD is a momentum indicator. So it tells us where the momentum is and if it's changing. So what we want to do is obviously ride a swing in momentum. Now, you can see the price moves down here. Okay, so it's a very large, strong momentum move to the downside. And you can see how the MACD charts that for us. Doesn't chart the price, but it charts the momentum of trade. And it's telling me that the momentum of trade is very heavy to the downside. That's what it's telling me. Now, what people do is trade a change in momentum. You can see that the MACD is telling me that the momentum has changed and the momentum is moving back to the upside. Now, what you can do is ride that momentum. You can enter a trade around this level where the MACD is saying, hey, the momentum's changed. We're not going to the downside anymore. We're actually trading up. And what you can do is try and trade that momentum from essentially the bottom level of the chart, which is super bearish, moving up into the mid level, even the top level. That's super bullish momentum, right? So what people will do is probably trade either from the low point to the midpoint to high point to midpoint, or midpoint to low point, depending on bullish or bearish moves. You can see we had a very bearish move. We moved up to the midpoint. That would have been a good trade, that momentum. And we're now kind of meeting resistance at the midpoint, telling us that we're actually kind of still fairly bearish in the momentum of this trade, right? Yes, we had a very strong move to the downside. That momentum changed as we kind of moved up and consolidated. Now we're kind of getting bearish momentum again. So what we would suggest here is maybe this momentum will carry on a little bit to the downside, or if we think there's some news and events that may change things, maybe we're going to get a change in momentum to the upside a little bit. So we're obviously now thinking, okay, the momentum looks to me, if it's in the middle, the momentum is going to change at some point, right? Because middle is no momentum, it's just a sideways move. So we're looking for a breakout here in momentum. Now we have to decide, now we know that momentum is going to change pretty soon. Are there any news and events for this trade, or are we just trading kind of a general swing in the market, or is there something else that's going to tell us? As of making this video, the momentum for me is economic figures that are coming out. So as you can see here, as of making this video, tomorrow there's going to be a jobs figure in the States. That's important because the market takes that as kind of strength in the economy. And so things will move off of that. Now, in a few weeks' time, as of making this video, there is an inflation figure that's going to be released. Again, that is market moving. Now, you have to make a decision on that, whether that's going to be good or bad for the price. It doesn't actually matter if you get it wrong most of the time, as long as you're getting it right, half of the time based on your analysis, you can put some good entry and exit levels in. Let's, for this example, suggest that those figures are going to come in a favorable way for the market, and we're actually going to move up towards some bullish momentum. So now we have momentum and we have price levels that we've put on the chart previously for support and resistance. Now we can actually go ahead and potentially enter into these trades. Now we can enter our trade and make sure our risk reward ratio is good for us. So this is the trade right here. So we go over to the chart and we've seen that the momentum has, kind of stagnated here, and that we might get a move. And let's just put a bullish trade on the chart. So very easily, we can now put a trade on the chart based on the levels that we've previously identified. So you can come over to the left-hand side right here and enter a long position. Now, the reason I would enter a long position at this level is I think those news events coming out would be fairly good for the price, right? So I can enter a level here, and because we're near the bottom of this trading range, I can enter a long trade at this level. And then what I can do is take my stop loss, and I want the stop loss to be somewhere around here, mainly because I've identified this level as the previous support. Now, if the price gets down to this level or kind of breaks this price level, the trade has moved against me. If I'm long, the trade's moving down and I got it wrong, right? Those news events actually put the price lower and not higher. I'm wrong in that trade. So you just put a stop loss there and say, I got it wrong, I'm getting out, right? So that risk that you're taking is not a lot. I get that price level based on the fact that this is the previous low. And if we're traveling down to that, it's not good news, right? So you want to get out before and just cut your losses. Now, in terms of take profits, you can try and take profit just before the previous swing high. That could be something that you can do. Or you can look at previous levels, like really close in, and say, this was a level where the kind of price consolidated here. This is also a moving average, which potentially, would get some resistance to the price. So you can move your take profit around here, for example. You can see the risk reward on this one is 2.1, which is actually fantastic if it worked out, right? So if these news events are bullish for the price, I would expect the price to move up to this level and cut my losses if I'm wrong. That is a good risk reward ratio. What if you think those news events will send the price lower though? You can just put in a short trade, especially when you trade futures. So you can go on the left-hand side, just type short position. Then you're going to enter a sell order first, entering a short position here. Then the stop loss is going to be above, because if the price rises, that's not good for you because you've sold short first. So what we want to do, again, this level here would be kind of an area where the price will get to very quickly. So that is probably where I would take a loss. If the price moves up against me and I'm short, that's going to make a loss for me. If it moves up to this level, that's probably saying, right, you got it wrong, right? The news was good and you thought the news would be bad. Now, in terms of a take profit, what I would do here is probably take it below this swing low. If the price moves down here, right, then it's probably bad news and you're going to be making new lows. And so I would be looking, to take profits around this level, or just running out the trade and seeing how low it can go before we take profits. If you're quite nervous, then you have to make your take profit before this. Now, the problem with that is, as you can see, that's not a great trade, right? The risk reward ratio is below 1, and I wouldn't take that trade. The reason being, that risk reward ratio is just not good enough for me. You need like 1.2 risk reward at least. So as you can see, going short here isn't a great trade unless you want to wait for those news events and the price does move down and break out of this support. Then what you could do is actually wait and enter your trade down at this level. Now, that's a much better risk reward, right? If the price is breaking lower, there are going to be a lot of stops that are going to be kind of taken out, right, from other traders. That's a better risk reward. What you're saying then, you'd probably put the price level take profit around here. That's a better risk reward, right? So if I was going short here, I would actually wait to see what the news is before actually going short. If I was confident that the news is going to send it higher, that risk reward is actually good and I'd enter a trade there. So hopefully that gives you some insight into when to enter the trade. It's based on support and resistance levels for me anyway, in terms of risk reward. And then it's just, understanding whether you want to go long or short based on your technicals, based on the chart patterns, and based on what you think the news and events will be. If you want to trade on MEXC, I'll leave a link to them in the description. They'll give you a deposit bonus in the account. If you want more help and videos, they're all linked in the description as well. I'm James, this is Money's EG. Cheers for watching, and I'll see you in the next one.